the Nasdaq 100 this week, it's been very much a yield story. The Nasdaq looks to have put in a false break this week after failing to break above this key trend line you see here in black, which was a back test of the breakdown from the 3rd of March. Price began the week retesting the 200-day. However, comments by Fed official Brainard, who by the way is the most dovish member on the committee, and when the most dovish member of the committee is talking up rate hikes and accelerating the balance sheet runoff, that's bad news for risk and equities. Follow this up with Fed minutes where the committee agreed to reduce the Fed balance sheet and potentially raising rates by 50 basis points at a time, and you end up with this kind of sell-off that we had. Just have a look at the 10-year yield against the Nasdaq 100, moving in opposite directions as you can see here. This is what is driving sentiment right now. It's very much about rising yields. In addition to this, I've shown this chart before and it's one of my favorites. It's the S&P 500 against the Fed balance sheet. Look at the correlation between the Fed balance sheet and the S&P 500. You can see as the Fed increased its balance sheet during the start of the pandemic, money poured into financial assets like the S&P 500. If the Fed is about to unwind that increase, that is going to impact the money that flows into the S&P 500. So it's reasonable to assume a knock-on impact on the stock market. Now going back to the technicals, price has found support at the 14,400 440 support area, which is big. And it's still early as we haven't finished the trading session just yet. So there's still time for price to close below this key support area. Now if bulls lose this, we could be seeing selling accelerate towards that 14K area. Below that and 13,720 comes back into play, which is big, because that reclaim you see here on the 16th of March is what triggered the most recent rally. If price continues to remain below the 200-day and this key trend line here in black continues to hold, it's difficult to get overly bullish. So to summarize, the upside levels to watch are 14,900 to 930, which is the back test of the most recent breakdown, followed by the 200-day moving average at 15,230. On the downside, support levels are 14,400 to 440, followed by 14K to 14,100, and 13,720. Continue to focus on the levels because the Nasdaq 100 remains choppy and trading is level to level at the moment. Switching focus to commodities and crude oil now, oil has remained choppy, and you can see that our first support area was hit around the 97.70 to 98 level. Price rallied off this level as you can see here in the daily chart. However, the short-term moving averages like the 40 and the 20-day have held as resistance. Since then, price has come off on the back of this report where member states of the International Energy Agency said they'll release 120 million barrels from its strategic reserves. So we're now back below that 97.70 to 98 area. What we've also had is a retest off that level, with price remaining below. Expect price to remain choppy on oil and continue to be headline driven, with upside resistance of 97.70 to 98, followed by 101.50. On the downside, 93.40 will be the first level of support, followed by 91.40 to 80. With that said, if you're getting value out of these videos, remember to hit that subscribe button so you don't miss future content. And I'll see you at the next one.